Assalamualaikum warahmatullah. Welcome back to Sada Education. We will continue from the previous video. As we know that the Quran has permitted al-bay' but prohibit riba, and we know also that the entity or the platform where riba exists is the banking company. So bank takes deposit and pays interest, and bank make loan and charge interest. And therefore, when we try to understand how al-bay' can be implemented to replace riba, so it is the banking company that we will still be using to illustrate how al-bay' can be pursued and implemented over riba. But now we will want to look at the banking business briefly, because that is the entity that we will experiment, or that has been used to experiment the business of Islamic Bank, and therefore there's a very great need to understand the nature of the banking business. As we know that a bank is a middleman that matches the flow of funds, from the surplus unit, the depositors, to the deficit unit, the borrower, and the bank will be able to match, or will be able to intermediate this flow of funds in a manner that will motivate them, in a sense that the business of banking is to profit from the difference between the loan rate and the deposit rate. And let us look at some of the illustration here. On the right side here, we got fixed deposit, one product the bank supplied, and these are basically a loan supplied by the depositor. So when we look at a deposit market, we are basically looking at a loan market supplied by the surplus sector, by the depositors, who are basically ourselves, the household sector, the business sector, the government agencies, and so on. So these are the entity that provide deposit funds to the bank. And once the funds are defined as deposit, they are themselves considered to be a loan. And this is basically defined by the Basel Committee of Banking Supervision, that any funds defined as a deposit, it is basically a loan supplied by the depositor to the bank. So now the bank will be acting as a borrowing party, and the depositor would be the lending party. So if you look at one example where a corporate make a placement of 10 million at a 3% deposit rate per annum for a tenure of 1 year, so the interest income generated from this placement is 10 million times 3% times 1, which is 0.3 million. Hence, when the placement were made, the day when the placement were made, the contract of deposit will stipulate that now the bank owe the depositor a sum of 10 plus 0.3 million, which is 0.3 million. So that is the amount of debt owed by the bank. So we can see that in the deposit market, there is a deposit appreciation from 10 million to 10.3 million over 1 year by virtue of the interest income earned by the depositors. And therefore, this is basically the system of interest that exists in the deposit market, where the depositors will be able to enjoy deposit appreciation without the taking of any risk. And this is something that we need to see because in al-bay' we presume that it is a risk-taking activity, and therefore any profit or income derived from al-bay' must be exposed to the principle of no pain, no gain, al-gharam bi-ghunni. However, that seems to be absent in the riba transaction in the deposit market, where the depositor will enjoy a deposit appreciation without taking any risk. So we will further look into this matter, as we compare the conventional deposits with Islamic deposits and see how, or Islamic investment account, and see how we can examine them and see, to what extent the al-bay' should stand out, to evidence the Islamic value of al-kharaj bidaman and al-gharam bidghunni that the Quran has promoted as when it have prescribed al-bay' over riba in the Quran. Thank you very much. I will see you again. Please don't forget to comment and to share and to subscribe. Thank you very much. Assalamu alaikum warahmatullah.